This was done by a Seton Hall and a Rutgers professor. It was done for the AICPA. Now, if you don't know who the AICPA is, they're the ruling body of all CPAs in the country. They determine how you're going to book assets, how you're going to handle this particular tax application, whatever the case may be. And the key statement that they make is right at the top. A taxpayer can substantially increase cash flow by segregating property costs. Now, this is an article that you're going to get, and once you consume this article and learn what's in it, you're going to find that this is based on that Hospital Corporation of America case. And just to give you a little more background on that, as I said, they owed $800 million. They were looking for every nook and cranny to try to save money, and they found that there had been cases since 1986 when the Tax Act was passed, and they found that this particular item was declared personal property of that particular item, but three big ones, the Whiteco Corporation, and then Walgreens won a big case against the IRS, and the HCA finally won in around 2000. They had the IRS on the ropes. The judge said, okay, yeah, I can see this is valid. A doorknob's a doorknob, a piece of molding's a piece of molding, and it should be depreciated, you know, in a shorter lifespan. Well, the IRS told the judge when he asked, well, does everybody know about this? Well, the guy from the IRS says, well, no, we don't want everybody to know about this. Sort of PO'd the judge. He slammed down his gavel. He said, not only is this valid, but from now on, anybody who submits a cost segregation proposal, when they do a 3115 change of accounting, it is now automatically accepted. Now, if anybody understands taxes, typically when you change any type of accounting procedure, you have to go ahead and make a request to the IRS. They review it, and they come back a couple months later and say you can do it. Well, guess what? The judge said, if you turn this in, it's automatically accepted, and they go ahead and will allow the cost segregation and the correction of the lower depreciation to the higher depreciation. So this is an article that when you go through it, you'll see a number of things that will tell you exactly what type of items are included, when it's worthwhile, when it's not. But again, this is my lead article. I hold this up and I show them. Cost segregation applied by two professors, and they're telling you that this is going to save you money. Now, I also go to IRS.gov and just type in cost segregation. You're going to get 5 chapters on how to do cost segregation. That's another very good credibility builder. But anyway, this is just a very important article that you're going to find very useful. But as we just said, the taxpayer can substantially increase their cash flow. Now, it's a very simple process. In order to get the increase in cash flow, you just have to analyze the information, and it's very easy to get. We'd like to get a depreciation schedule. That tells us everything that's on the books, and if the guy's got it handy or a CPA can get it to you quickly, we advise getting it because it'll increase your closing ratio. It'll improve the numbers that we're going to get for the feasibility study. You go back and you review the study with the owner of the building, and you complete the process. It's pretty simplistic. Now, all you have to do, and I should have a copy right here, if you don't get the depreciation schedule, Tony. Let me grab one of these here.
And while he's looking for that, Tony, I got a few questions stacked up. Do you want to take them now? Okay, go right ahead. Okay. All right. There's other cost segregation companies out there. Why is your company the best?
Well, we've done 5,000 of number one, and as I said, we were involved with the actual attorney who was involved with the winning case with HCA and the Hospital Corporation of America. So, you know, after 5,000 studies, we've done virtually every type of building out there. Jim has a patent pending procedure to expedite this. Now, if you understand that when this first was developed, when this first became law, the only people that were doing this were the big four. You know, they would go into Manhattan and they'd wind up doing the $20, $50, and $100 million skyscrapers. But like I said, Jim came in with a $1 million building. They said, forget about it. Now, we have taken this because of his patent pending process and the way he's applied the algorithms, et cetera, to the program. we can take this down to a building that's worth only $300,000. Now understand, we're not talking land. We're talking strictly the cost of the building. So I think our experience, we're strictly in engineering firms. A lot of the other firms that are out there, for example, accounting firms say, well, we do cost segregation. Well, guess what? The IRS recommends a third-party authoritative individual with building and construction experience and engineering experience. Well, a CPA doesn't have that. As a matter of fact, we did about, I guess, around 70 different studies after a CPA had completed the cost segregation. They left anywhere from 60 to 80% of the money on the table. So we refer to that as an accounting cost segregation, and that's really not valid. It won't even hold up with the IRS. They've got to justify engineering-wise if they're ever audited. So I think we've become the premier group. Like I said, we've done about 5,000 of these now, and it's strictly an engineering company, which makes a difference. Some are appraisers, some are accountants, but we will sit down and go line by line with an engineer, with the IRS, and justify each and every line item in our study.
Let me ask you this, Tony. What if the IRS comes back and questions the audit? What happens then?
Well, we guarantee that we'll have our guys sit there and justify each item line by line. I will tell you that we've had, in all those studies, only about a dozen cases where we had to sit down with the IRS, or there was an audit, I should say, and it wasn't because of the cost segregation. It was because ABC company was audited, and they just have happened to go ahead and do a cost segregation process. Well, when they looked at our booklet, and that's one of the things you'll be getting in your package, you get a complete study, and it goes line by line, 13 items that the IRS requests. It tells, different court cases. It tells what your methodology is. It explains everything. We do a site survey with every single study. Now, one of my guys in Texas is doing 40 sonics right now. Well, we're going to have a guy out, and he's going to take a look at each of the sonics. They're going to do digital photography. It'll be incorporated into the package. So the IRS wants to know we've been out there. So in all those studies, they looked at our booklet, paged through 2 or 3 pages, threw it on the side, and said next. We have never had to go line by line because it's so professionally done that they can see that they'd have to get an engineer in to refute what we put in our proposals.